Hello, welcome back. Mitch Argon here with Calneva Realty. I'm going to take you through the Greater Reno Tahoe real estate numbers and how we're doing in just a moment. Okay, let's take a look at December of 2023 and see how we're doing. All right, median price, as you can see, fairly stable to modestly up across most of the markets in our region. Dayton is down 16%. That's probably a bit of a 1 month anomaly. Tahoe showing down as well. Keep in mind that there's very few transactions in Tahoe, so the median price is going to move around quite a bit. So not real stable, but for the most part, you can see that we're modestly to reasonably high up in the Carson Valley. We'll talk more about this in a little bit as well. Here's a snapshot of the last 2 years on median price by all the different cities or areas in the region, excluding Tahoe, which would take this off the top because the prices are so much higher. And it's really surprising if you go back and look at November of just last month and across any one of these markets, November of a year before, 2022, and November of 2021. So by example, if I take Reno, you can see 566, 567, and 581. Very stable when you look at this on a year-over-year basis from the last 2 years. Carson City, 510. Here we're at 470, so we're down 40. And here, again, we're right back to 510. So the theme, really, of the last year to 18 months has been price stability in the wake of the higher interest rates that we've all been dealing with in the marketplace. Even though prices have been stable, modestly up, the interest rates have gone up quite a bit. And so this chart here speaks to affordability. You can see that we are down from the prior month. Median price, this is for Reno as a bellwether, was $581K. The monthly payment for the median price with 20% down was $3,232. So it's come down a bit, still fairly high. Rents have gone up quite a bit as well. If I was showing the average rents on this chart for probably a 3-bedroom home, we'd be not too far from that 3,200, probably in the maybe $2,500, $2,600 a month range. So we'll keep our eyes on that as interest rates come down, which they're likely to. Hopefully that payment will come down too. A little bit bigger picture view. We've talked about the median price over here already. Homes sold, you can see, for the most part, are down. This is largely due to inventory constraint in the marketplace, which we've been dealing with all year. You can see Fernley is up in its number of homes sold. That's probably a bit of an anomaly, and these numbers are quite small, even though it's 17% up. You can see it went from 29 to 34. So from a magnitude point of view, not a huge jump, but a big jump in percent. Month supply of inventory for most markets is down, meaning the markets are tightening up, favoring a seller. You can see here that the Carson Valley market in Douglas County is up 27% from the prior year. And so we are seeing a little more inventory build in Douglas County as well. So that market is moving more towards a balanced market. Tahoe, the month supply of inventory is really not, while we're reporting it here, it's not something that is best indicator as to what's going on in the Tahoe market because of the unique nature of that market. Here's a snapshot of inventory. You can see that for all markets except for the Carson Valley, which is pretty much the same as it was a year ago, last December, we're quite a bit down and quite a bit lower on inventory. And that's been a major factor towards that price stability that we took a look at earlier in these charts. If you look at the magnitude of this, the big one that jumps out, of course, is the Reno market. It's a bigger market. It's got more inventory, but you can see here that we're at 469 currently for single-family homes in the market. A year ago, we thought we had low inventory. We were at 718, so quite a bit lower. And here you can see for each market, we're for the most part lower, but Carson Valley, as we were talking about earlier, is showing about equal. Month supply of inventory, we talked about this. This is just a visual view so you can see what's going on here. Carson Valley is kind of leading the range here at the higher end of the pack. Everybody else was clustered in and around this right around 2 months, high 1s, low 2 months supply of inventory. So we'll see what happens with Carson Valley. I wouldn't expect us to have a break out from the pack in any significant way. It may just be a few months of an anomaly that we're looking at. It's been on an elevated basis here for about 3 or 4 months. Quick recap. 2023. I think the big story for 2023 was that prices have remained stable. A year ago, when I was talking with my agents in my company about what's likely to happen with the interest rates rising, it appeared as though there would be a more significant correction on pricing to counterbalance the increased cost of the loan because of the increased interest rate. But here we are a year later looking back, and prices have been stable to modestly higher, which we've seen. And that's largely a function of the counterbalance between the higher interest rates, which has put downward pressure on prices, and the low inventory, the lock-in effect, as we call it, which has put upward pressure on prices. So it's been a draw. Basically, pricing has remained stable to higher because those two very significant forces in the marketplace have basically propped it up. What can we look at for 2024? Well, we just learned last week that the Fed came out, and based on inflation, they're expecting to cut the prime rate 3 times in 2024. It's likely to happen in the back half of 2024. I don't think we'll see it here, in the next 3 or 4 months. So current interest rates are in the 6 to 6.5% range. The government-backed loans, VA, FHA, are about 6%. I got a quote from a lender the other day, 6.375% for conventional. So we're likely to see interest rates towards the latter part of 2024 beginning with a 5 point something. And we haven't seen interest rates that low since the summer of 2022. Well, summer of 2022 is when the markets peaked in terms of pricing. So what does all this mean? Well, I think that we're going to see buyer demand increase before seller demand or seller appetite to leave their low interest rates eases. So the net effect, I think, is we're going to see more demand coming on the market than we see more supply coming on the market. When you have more demand than more supply, it generally creates an upward pressure on pricing. And I think especially towards the second half of next year, the markets are going to probably feel a little tighter than they do right now. Inventory is still going to be constrained, and I think we're seeing more demand and possibly higher prices. Don't always look at things that way, but this is the best view from where we're sitting right now and based on what we've learned over the last 12 to 14, 15 months. So I hope this is helpful for you to get some perspective, whether you're looking to be a buyer or a seller or just tracking the markets in general as we move into 2024. With that, I'd like to wish everybody a very Merry Christmas, Happy Holidays, and a great new year for 2024. This is our last video of the year. We'll be back online in January, of course. If you have any questions, please feel free to reach out to any of our agents in our Reno office or our Minden office who you may be working with. If you don't have an agent assigned to you, you can reach out from the email you may have received in this video, or just contact us by Google searching Cal Neva Realty, and we'd be happy to help out any way we can. For now, signing off. Thank you for watching.